Bilt just announced a ton of information for 2.0. We'll look at the transition, the new products, why you might want to cancel, along with some new side partnerships. Big favor before we dive in is to give this a thumbs up to help with the algorithm. If you know someone that might benefit, then share this with them. As a starting point, a lot of this new stuff is happening in a few months. If you currently have the card, nothing is changing for now. You can keep using the card until February 6, 2026. A month before that though, you do have a choice. So in early January, current card members can select from the new cards. Most importantly though, when you do select it, it's a soft pull, not a hard pull. On February 7, 2026, the Bilt Card 2.0 officially launches, and the card that you select will be delivered for launch day. It does seem like they're doing a lot of stuff in the back end to make sure that the transition is smooth. For example, card numbers are staying the same, so any auto pays or subscriptions are going to be fine. Digital wallets are going to automatically update, so pretty easy there. And again, it's not a hard inquiry, it's going to be a soft one. Along with these straightforward ones, there are going to be some where your mileage may vary. For example, if you do transition to 2.0, then you might be able to transfer your balance from the old card to 2.0. This is going to be subject to approval though. We don't have information on this yet, so I'm kind of curious what they're looking at, whether it's maybe you have on-time payments, or if the balance is too high, then maybe they won't transfer. I guess we'll see there. If you decide not to transition to 2.0, then you can either close the account, or you can keep it as a Wells Fargo card, and it's going to become an autograph with a different card number. On your end, this presents an interesting opportunity and what I consider a gambit. So a calculated risk that might give you an advantage, but might also fail. Let me run through my logic. As a reminder, there's going to be 3 card types, a no annual fee one, $95 annual fee, and $4.95 annual fee. The initial Bilt card was no annual fee, so intro bonuses and expectations there were relatively low. With 2 new levels, this dramatically changes. So we don't know the exact numbers, but I think it is fair to comp it to other cardless cards. Looking at one of the newer ones and points-based ones, we have the Qatar Airways Privilege Club Signature Card. This is their $99 annual fee card, where you can earn up to 40,000 AVOs, 20k for your first transaction, and another 20k for 3k in spend in the first 90 days. Okay, so what's this worth? A very conservative estimate of AVOs is 1 to 1.4 cents per point. On the top end, if you care about aspirational travel, then I don't think 2 cents per point is unreasonable. For example, you can use 62k points to book with American Airlines, which is a One World partner, so with an Avios, to fly from New York to Paris in business class. 7-hour flight and a good redemption. Mapping out these options, at 1 cent per point, that's 400 in value, 1.4, 560 in value, 2 cents per point, 800 in value. And to be fair, this is pretty consistent with other mid-level cards. That's kind of what you're expecting for intro bonuses. For the Qatar Airways Infinite card to the $4.99 annual fee one, it's up to 50k AVOs. 25k for your first transaction, and then an additional 25k for 5k in spend in the first 90 days. It is less apples to apples and arguably less fair. The main reason being that the 99 one gets you silver status, which is only One World Ruby, while the $4.99 one gets you gold status, which is sapphire status with One World. This gets you a ton of benefits of Qatar, but also with other One World partners. For example, of Sapphire, you have access to One World business class lounges, so a ton of different airline options, and you get this when you're flying One World. You also get other benefits like priority boarding and better access to seats. Even if you're just a domestic flyer and you have no interest flying Qatar, it makes a lot of sense for American Airlines. A bit in the weeds, but if you do have the status, it means you can access Admiral Club lounges and flagship lounges when you're flying American Airlines, even if it's just domestic. If you had status through American or Alaska, then short haul would not work, so SFO to LAX would not count. Yeah, for this card, 50k AVOs, so 500 to 1,000 in value. Okay, what about no annual fee cards from Cardless? Looking at some historic options, Cardless cards have been decently lucrative. So for a lot of the sport team cards, it was no annual fee, and you were looking at 200 to 300 back for 2,000 in spend in the first 3 months. So based on these comps, we can project intro bonus values for the 3 different cards. For the no annual fee one, probably 200 to 300 in value. For the 95 annual fee one, probably 400 to 800. And then 495, probably 500 to 1,000. To be fair though, it might not happen, but I do question how many people are going to sign up for 495 annual fee card if there's not a giant carrot that they're dangling in front of you. Even if you compare it to other big banks, there's usually something pretty sizable there. People aren't signing up for cards for fun, they're doing it to get value. So given this, and I'm probably going to make enemies, you're arguably not incentivized to transition over to 2.0. The exception being that if they give you a conversion bonus to convert. The entire reason why issuers are willing to pay so much is expected lifetime value of a customer, so kind of the long-term value. And it's especially the case for these higher annual fee cards where they pay a lot up front to get value long-term. The intro bonus is their version of planting a tree and hoping it grows and yields fruit. By you transferring over without getting anything, you're kind of doing it for free. So given this, as weird as it sounds, it might make sense to either keep it as a Wells card or cancel and then figure it out from there. To be fair, there are a lot of potential arguments against this. For example, if they decide to add a once-in-a-lifetime rule for their cards. There's also an opportunity cost. Especially for people under 524, adding a new card might lock you out of other stuff. If you're eligible for business cards, it's your last chance for some great offers. Both are ending at 9 a.m. EST on November 13th, 2025. For example, the Inc. Business Unlimited credit card is offering 900 bonus cash back after $6,000 spent on purchases within the first 3 months from account opening. Not bad at all for a no annual fee card. This is a great catch-all card where you get 1.5% unlimited cash back on everything. Even better, you're technically earning points. Each $1 in cash back is 100 points. Depending on the other cards you have, you might be getting a lot more value. For example, if a bunch of other cards, like the Chase Sapphire Reserve, you can transfer to partners. The best use case is international first and business class or luxury hotels like Park Hyatt's around the world. The next card is pretty similar. So the Inc. Business Cash Credit Card has the same exact offer, and even better is that you can get both. These are separate financial products. There's no rule stopping you from getting both cards, along with their respective intro bonuses. This card is a bit different and people like to use it for gas stations and also internet cable and phone services, and especially office supply stores. But yeah, no annual fees, so very little downside risk. Also just great tools to have, even if they're more specialty ones. On that note, if you want to learn more about cards and you want to support the channel, we have links on the website, AskSebby.com, and also down below in the description box. Make sure the links are competitive, that they make sense for you, but otherwise it's a huge way to support the channel, so thank you in advance. Also, as a reminder, you don't need to have a Bilt card to earn Bilt points. Tons of tactics here, and I'll leave a blog post in the description box below if you want to learn more. One consideration though is that they might delay intro bonuses. So for example, when Bilt 1.0 launched, there wasn't an intro bonus. Later on, when they started hitting saturation, then they started offering up to 50k bonus points with a small window to earn it. It still made sense for a lot of people though, since you could time big purchases or tax payments to get that up to 50k. The main idea being that there might be a bonus, but it might not be immediate. In the meantime, Bilt 2.0 will start earning points on eligible mortgage payments regardless of who the mortgage is from. It depends on the structure and how big your mortgage is, but there is an opportunity that you might be foregoing. Maybe unfair, but a bit of me does question how lucrative it could possibly be. So the reason Bilt 1.0 even worked was that Wells Fargo was footing the bill and pretty much bleeding out and taking the hit. In their case, they were losing millions, reportedly 10 million a month. Consider that the deal was supposed to end in 2029 and they ended it early in 2025. So an 8-year deal that they ended after 3 years. Mapping out the outcomes, we won because we got value, Bilt won because they grew enterprise value and became a unicorn, and then Wells Fargo was the one footing the bill. The question becomes, who's the new Wells in this situation? Is it Cardless, who just raised a fresh round and they're comfortable losing money to prove this whole Bilt use case and to show how powerful their infrastructure play is? Alternatively, maybe it's their new mortgage partner and they're using it to get more market share. And to be fair, we are also seeing this with other premium cards. The bank wins, people that benefit also win since they're getting more value, people that don't benefit cancel the card, so still works out, and the big question mark happens for partners like Lululemon. Speaking of partners, you can now turn your Rakuten cashback into Bilt points. For now, $1 in Rakuten is 100 Bilt points. After 6 months, if you have blue status, $1 Rakuten is 50 Bilt points, so half the rate, and then silver, gold, and platinum is the same 1 to 100 rate. Pretty much non-viable in the future unless you have status with them. Also consider that Rakuten does have another bank partner, which might be more beneficial for you. I guess it depends on your use case and your final airline or hotel partner that you're looking to transfer to. So for example, for hotels, I think Bilt makes more sense. For flights though, I'd probably go with the other bank partner, but your mileage may vary there depending on what you're looking to do. Right now, you can go either way and that's fine. In 6 months, you pretty much need to have status. Main takeaway for the Bilt stuff is if you have very high rents or mortgage payments, depending on the new cards and how they actually work, I'd hazard to guess that it does make sense to transition over, especially if you don't want to reapply. Intro bonuses are nice, but if you have 10k in rent per month, you're going to earn it back pretty fast. For normal people though, intro bonuses move the needle. So for example, let's say for the $95 annual fee card, let's say there's 500 in value for the intro bonus, so 50k Bilt points. Assuming the economics are about the same, let's say you earn 1x points for your rents, ignoring all the other backend stuff, in order to earn 50k Bilt points, you would need 50k in rent. 50k divided by 12 months is 4,167 in rent payments per month. That means in order to get 500 in value from your rent payments, you're paying about 4,200 per month for 12 months, so a whole year. If your rent was only 2k, then that's about 2 years. If your rent is only 1k, then that's about 4 years. That's not bad by any means, but a lot slower than you might think, especially compared to intro bonuses or other sign-up based incentives. Another consideration is to use your rent payments to hit intro bonuses for other cards that have very high minimum spend requirements. Like we mentioned, there are offers for 900 back for 6,000 spend in 3 months. Oftentimes you can pay rent of your credit card for a 2 to 3% fee, so let's say that's 2,000 in rent per month. Total fees there would be 6,000 times, let's say 3%, so only $90. That's $90 in fees to get $900 as an intro bonus. On the other hand, if you just ran it through Bilt, that's 6,000 times 1x, so about $60 in value. I'm going to tell you a secret, but early on, the reason I've been able to hit so many intro bonuses is rent payments. I live in San Francisco where rent is expensive, and this is the way to get the most value back for that spend. Once you run out of cards, then the equation changes, but otherwise rent helps with those cards. Out of curiosity, let's look at Wells Fargo stock. Zooming out into the 5-year, Wells is actually performing really well relative to the industry. XLF and KBE are pretty much ETFs for the big banks as a whole, so that's only up 70% and 110% respectively for the 5-year. Wells Fargo is up almost 300%. Obviously, they do a lot more than just credit cards, but it feels like they had a pretty good stop loss on the Bilt deal. If you're looking for a new brokerage, Moomoo has a pretty good welcome bonus. You get between $20 and $1,000 in NVIDIA stock, depending on how much you deposit. You also get 8.1% APY on uninvested cash for the first 3 months. There are terms to watch out for. For all the levels, you need to maintain assets for 60 days to get the bonus, but it feels pretty fair. The math isn't bad either. So for level 1, you're getting 20%, and annualized, that's 203%. The other levels are more reasonable, but annualized are still pretty awesome. Also a reminder that this can be invested, so you're not just holding cash. Offer runs until end of the year. I'll leave a link down below if you're curious. Last thing I'd love your thoughts on is a startup trying to do Bilt for investing. So I'm thinking about working with them, but want to get a vibe check first to see what you think. The idea is that you're getting 1x points on your portfolio with them, and it's going to be paid out monthly, so 1x is over the whole year, and they prorate it every month. This can be buy and hold stuff, so SPY, ETFs, and that type of stuff. You don't need to actively trade, and the base level won't have an annual fee. For example, if you have 50k in AUM, so assets under management, then that'd be 50k points per year. The obvious question is whether it's safe. They have a back-end partner that's a super large financial services company, so think Fidelity, Interactive Brokers, Charles Schwab, E-Trade Level. The startup is also an investment advisor registered with the SEC, and the back-end partner is the broker-dealer. I think what they're trying to productize is the fact that other brokerages have transfer promos to get AUM. So for example, it's not abnormal to see Webull or Moomoo or Robinhood to offer something like 2% for you to move money in. Normally, you need to keep your assets in there for 2 years to qualify, so effectively 1% back as a bonus every year that you have it with them. The reason brokerages offer these bonuses is that they hope you transfer it in and then keep it there and don't transfer it out. So instead of finding the optimizers moving money around every 2 years, they're giving 1x back for you to stay put. From my understanding, they're adding the same transfer partners that we normally talk about, so the 1x might be actually worth 2% back or more, depending on how you use the points. To me, the product makes sense and the economics kind of align incentives, so it feels like a win-win, especially for normal people who aren't looking to move around 6 figures or 7 figures every 2 years. End of the day, I want to find win-win situations, so products I like that I don't feel bad recommending, but ones that you guys also like. So yeah, let me know your thoughts. Again, if you want to learn about cards, we have links on the website, AskSebby.com, and also down below in the description box. And if you're curious, all legal affiliate disclosures can be found below in the description box. If you made it to this point, leave a stock emoji, stock chart going up in the comments down below, and I'll try to heart it and also respond. 3 questions. What are your thoughts on the Bilt situation, and how are you going to play it? Number 2, what are you hoping to see from each level of the cards? Lastly, are you surprised that Wells Fargo is doing so well as a stock? Because I am. Let me know and everyone else know in the comments down below. Big favorite, thumbs up, share this, but otherwise hope you liked it. See you next time.